What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is May 27th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we're going to be focusing in on the yet again continuing craze in crypto markets as we've set all new highs for the year of 2019. And this is really going to come as no surprise as we take a look through a basket of different macro factors that are going to lead a lot of liquidity to move out of traditional markets into cryptocurrency markets. So we've got lots to discuss. Let's not push it off any longer right after our quick sponsor.
Oh. All right.
Alrighty, everyone, so as we take a look at cryptocurrency markets over the last 7 days, we have been on an absolute tear with not only Bitcoin but also a variety of altcoins. Again, really the only things down are being a few exceptions and mostly stable coins. And outside of that, over the last 24 hours, we have continued that trend. Most altcoins obviously aren't keeping pace with Bitcoin. We've got a few exceptions up here, some of which have been really oversold. But again, just to see cryptocurrency markets in this kind of double-digit territory, to see Bitcoin moving up 10% in the last 24 hours, a whopping $800 after an already parabolic run-up, shows that we are still in the craze here. We're still going up towards a much larger big even. And as I've talked about and we'll continue to press, we've really got two levels we're watching. We're watching 10,000 to be the next point of resistance and support down at 6,000. I think that's when we're going to get our 40% correction. It's a very big even at 10,000 as well as 6,000. 6,000 is very significant, guys. And you know, I've been talking a lot about altcoins as well, how I'm getting much more interested in taking a little bit more risk. It seems like liquidity has entered back into the market, some real organic liquidity on some of the serious exchanges. And we're starting to see, you know, some well-established altcoins like Ethereum and Litecoin and some of the more mid-tier ones in the top 10 to 20 really starting to get some buyers coming in at these levels. But taking a look at the last 30 days here, again, we talked, in the previous video about being in the twilight zone. And, how, price and valuations for market capitalization were coiling in, and we got the breakout. In fact, we moved up in a matter of a few minutes, I would say probably about an hour or two. We really moved up about $20 billion in valuation. We've continued to press higher towards there, looking like we might be going for 300 billion, which would not be far-fetched if Bitcoin's going to 10,000 and altcoins, relatively follow as well. I would fear that I'd feel that we'd actually get a little bit of reduction as we saw in some altcoins if Bitcoin were to go to 10,000. It's just that a lot of that liquidity would be, kind of FOMOing into the leading play here. And again, market dominance slowly creeping up here. Bitcoin still keeping, on its trend here, even though it had a pretty decent correction back a few weeks ago in mid-May. Again, we're still continuing this trend up. We might be setting newer highs for Bitcoin dominance if we reach that 10,000 level. Again, I still see kind of like a drain of liquidity, one last flush on some of these altcoins. Now, let's just go ahead and take a look at the scale price here, guys, and what we've seen. I mean, this is just like out of this world. Now, again, it's very reminiscent. If you look at really the distance on the log chart here of what we're experiencing, right? It's not too far off from the lows here. Now, again, it's a little bit of a wider range here than what we've seen before, even on the log chart. I mean, if you were to scale this with the price range down here, it wouldn't even be comparable. But again, I mean, this is that kind of parabolic exit out of the bear market, and a lot of people are starting to price in a lot of the beneficial things that are coming to crypto. We've got the halving coming up. Miners have to price that in to their operations. If they will have a better opportunity just buying Bitcoin on the spot market, they're going to buy it. You not only have that, and you have continued developments going on. Even with all these developments, you would still think, Nick, is Bitcoin overvalued? Well, a lot of the indicators will tell you that. Obviously the RSI is showing that it's overextended. Let me go ahead and, I don't know why the little drawing tool won't go away. Anyways, you can see here that the RSI is pretty overextended. It's already revisited up here 2 times, and it looks like it might be going for a 3rd time. And we've also seen NVT is extremely overextended, right? We're not setting new highs on it in this relative sense. We had that back a few days ago, so transaction volume is increasing, but we're still way overextended. This is very similar to what we saw back in 2014. So, even with all these things, would it say it's time for Bitcoin to correct, right? Well, no, I wouldn't say that's exactly the case, guys. We very much could go on to the big even at 10,000, which is obviously the next. Not only is it a very key level price wise, but it was resistance back here in May of 2018, right? Almost a year ago. So it wouldn't be too radical to think that if it's already done this, that it's probably going to go to 10,000. No, I wouldn't set your sell orders exactly at 10,000 or try to time the market. For some of you out there, again, guys, I'm not going to recommend you anything. I think most of us agree that hodling is probably one of the better ways to just play this market. Stop trying to time it and get too crazy on it. I just like to cover the price action, just kind of to guesstimate where we're going and what would be some good pullback points. But I think 10,000 is very likely. And then after that, we're going to have a very similar correction, down to 40%, what we saw in the last parabolic run-up back here in 2015. And that's going to lead us down to a range where we can actually go ahead and be able to pick up some nice cheap Bitcoin. Now, the thing I want to talk about in the short term as we're diving into that, one thing that I want to discuss here over the next few 24 hours, 48 hours is that we're probably going to see a little bit of a correction, and it's probably going to be back down here towards around 83 to 82.50. And the reason I say that is if we take a look at the weekly, it tends to be that in most uptrends, there's a few exceptions. Maybe, for example, over here where there's a candle that doesn't have a wicks at the bottom of it. You can see that in most of these uptrends, we have the wicks reclaim or retest some of the previous price action of the last week, right? So we're setting new highs every time on these green candles. But you can see that the wicks, which is basically, it means that the market had opened up here at the beginning of the week. It retested down here at some time during the week and then went out to set new highs. You can see here that the wicks consumes a lot of the previous candle. I would say that we're probably going to come back down to 82 to 8300 and then break out to new highs. I apologize, my lines are showing here because this is the logarithmic chart lines that I have, so I'll go back to the daily. I'm on Bitstamp. So if we take a look here, I think again we'll probably come down over the next few days, build support on that range, and then break out to 10,000 in a very short period of time, right? So if you feel like you're missing out on what happened the other day, don't fret on it, guys. And as we talked about, we did not overcomplicate the trade the other day, guys. We said to watch the wedge, right? We said to watch it here, basically just watch the resistance level, watch the rise in support that we had on the chart. And right when we got above 8,200, if you just basically bought or had a limit order at 8,200, as we talked about, I had my two levels. At my levels, I think it was 7,600 was the one I was watching, and then 8,200. Might be wrong. I think it might have been 7,800. Those two key even levels, you can make an easy $600 profit, just like that per Bitcoin. So that's what I like to keep it simple, guys. There's no crazy indicator that would have told you which way it was going. And I always am reminded when I was trading equities back in the day, there was this one time where I had just gotten out of a really successful multi-month long trade, and I got into this pharmaceutical company. And a little did I know, I bought it 15 minutes before the close. Later on, it popped up like 40 or 50%. And it was because they had released some kind of phase 2 success trial. If you guys know about pharmaceutical companies and stuff like that, it's pretty common. I was doing it more of a short-term trade. But I thought about it. I had no idea that they were going to be revealing that day. And as much as I could have been joyous over the 40 or 50% increase in price, I sat back and I thought, man, what if it went the other way? What if it would have gone down 40 or 50%? Let's say they got the rejection on their FDA approval or their phase 2 trial. That would have been demonstrous. I would have lost half of my money that I had worked so hard for over the last few months, for my part-time job when I was back in high school and everything. And, I was doing all this saving and everything and then investing, and I made a great call in this previous company. What if I would have lost it all? And that's why I tell people not to try to trade to the twilight zone. Don't try to place your bets right before. Wait until you can get there, because if you have a limit order set there, the market is not going to fulfill an order above that before it gets to yours. If you're on Coinbase or a reputable exchange, that's just how the market works. Buyers who have their order set like that, you're going to get your limit order, right? So, again, just point I wanted to make there in that case, in the sense of price and trading markets in that case. You can ride the bulk of it without having to take that much of the risk, okay? And the same goes for shorting in that case, if you have the opportunity to short. All right, so I've rambled on enough about Bitcoin. If we take a look here at some of the alts, I know you guys are getting interested in the altcoins. Ethereum really just getting back up to where it was on May 16th. As you can see, the dominance here is still going to Bitcoin. ETH to BTC still declining at the moment over the last few days. This really, to me, looks like a flag, which makes me excited that some altcoins, as Bitcoin goes to 10K, we might get another, kind of rally back upwards on Bitcoin, or excuse me, on altcoin dominance. But I really don't feel just yet that we're in an altcoin cycle. And in fact, we've really only recouped about a month's worth of loss comparative to Bitcoin for Ethereum and some of the major altcoins as well. If we take a look at XRP, which is a known momentum play, we should be seeing XRP do really good. It's only brought us back to early May. So I think that you have a chance maybe in the short term to get one more bump up. But I really think that we're not just yet ready for the altcoin cycle. What we need to do, in my opinion, what I think we need to see, and I'll talk about this in my altcoin video that I do here in the next few days, you're basically going to see Bitcoin probably go up to 10,000, decline. Altcoins are going to sell off just as strong as Bitcoin starts to gain continued dominance. And we reach down to 6,000. When we make support in 6,000 and signify that, hey, sorry guys, Bitcoin's not going to 1,000 or 2,000. It's not going to 3,000 or 4,000 again. It's going to be staying here at 6,000 and making higher levels. If that's the case, then that's going to solidify that the risk season is in full effect. That means that altcoins are going to have some decent room to move. Not as much as they had in 2017, let's be fair, but they will have some room to probably move. Whether it's pure speculation, development of fundamentals, I'm not going to try to guess or make a point on that, guys. We know that there's a very good chance that if that happens, if it holds at 6,000, that we could see some excessive risk taking that we haven't seen since back in 2017, which is exciting for traders. It's exciting for investors, and more than anything, it's exciting to see people kind of getting rekindled about the space. Now, above all, the summary here about the Bitcoin price action is that I leave for 1 hour to bake sauerkraut. I'm trying to live a healthy lifestyle, guys. I'm trying to get some good fermented food. And lo and behold, from the hours and hours that I spend watching the charts and keeping up with this market, Bitcoin decides to move like this while I'm away from the computer. I feel personally attacked. Hashtag stand with Nick. All right, anyways, guys, in all seriousness, I don't know if I feel as violated as the shorts do on these altcoins, but I mean, the contract liquidations were just crazy. Over the last few hours, it's just been crazy. And one other thing in the sense of news for cryptocurrencies, and that is the shutdown of Cryptopia. Cryptopia was one of the more predominant New Zealand-based exchanges that had a lot of different altcoins. It usually was pretty open to listing just about anything. There was a lot of crappy coins on the exchange. But after the recent hack that they actually had to declare bankruptcy and are going about shutting down the exchange. And it does stink. I think more than anything, as a positive note, I'm not like getting enjoyment out of this. I used to use Cryptopia sometimes. I had a few small positions on there, but I moved everything off the exchange eventually because I didn't see it evolving, as I don't see a lot of these exchanges in the space evolving, guys. I feel that they get comfortable, they make their money, and they don't try to provide a more secure experience for holding funds, expanding user experience. That's just me personally. I'm not trying to insult the team here, but I think that when you get this kind of trading revenue coming in and you make a lot off fees and things of that sort, you need to work towards expanding and building a better experience. So I think it's a learning lesson more than anything, but I wish, the team behind, the team of Cryptopia all the best in the future, and hopefully this can be a learning experience and they can go on from this and build better things. So going out of crypto markets and actually kind of, rekindling back to crypto, but kind of focusing on the outer factors of the world, as we can see here, we'll take a look at, actually I'll refresh the page here so you guys can see the overall U.S. indices. Right now, U.S. futures are really unchanged. However, I can tell you all that these are probably going to get dragged down with the recent drop in most Asian markets. You've got the Hong Kong indexes, you've got Singapore, Chinese, and Taiwan indices that are all trading down at the moment. And I think you can see that U.S. futures in this case, which are tracking the indices, are going to start to come down as well. I think we're going to see a continued sell-off, and this is coming at a time where price is already tethering right on some very key levels, right? This was previous support here, previous resistance. If you break through here, I think you're going to really start to see the momentum go through, and most of the indices are following that. But who can blame them, guys? the ECB and most central banks right now are in a really tight spot. The ECB, for example, there's a lot of points here made in this article where most of the EU bonds in this case, are showing negative real yields in this case. So they're showing negative rates. This is for a lot of economies, for example, Greece and Italy. You've seen a massive decline in manufacturing in the EU at the moment. And not to mention, this is one thing that really stood out to me, excess liquidity, basically the liquidity that's not required for a bank to hold. The excess liquidity in the Eurozone exceeds 18 trillion euros. $18 trillion of capital. That's $18 trillion that is most likely not going to be shown in the economy. That is not going to be circulating and creating jobs. It's not going to be creating real economic wealth. It's just sitting there, right? That's the inflation you're seeing. The consumer price index as well, they talked about in the article, has gone up 40% since 2000. And I really am curious about how the ECB measures their CPI, because I know in the US, we don't include a lot of food prices. And boy, I can tell you, going to the grocery store, I don't need to be an economist. I can see just how ridiculous it's gotten over the last few weeks as prices are going up in this case. Central banks are meeting their inflation target when it comes to food and everyday consumer goods. Not to mention, another article came here through Zero Hedge in the last 24 hours with Manhattan seeing continued monthly declines, getting sharper and sharper here on the percentage points, as we're seeing a massive decline in some of the city bubbles for real estate. And this really has to do with a cutting down on Chinese liquidity coming through into Canada, to the US, through a lot of Western markets like Australia. It's finally starting to slow down. And I've had people who are property developers, people who have been in the real estate space in Australia and different economies across the world. They're getting fearful. They're getting really worried about this continued decline, that it's just a consistent decline. Seems like the domino effect is in full swing. And to mention, you've got growing fears that we're not ready for a full trade deal just yet, right? I think this is kind of, as much as this is kind of blown as the major proponent of why markets are going down, guys, I think honestly, eventually we will reach some deal. This is going to be a multi-year process, especially if Trump gets reelected in this case in the next few years. It's going to be a talking process. And even if Trump leaves it, you're going to have someone else in that position, I think. This is something that's far beyond one person or one party in this case. I think this is going to be something that'll be continued to be pressed if whoever steps in is, obviously eager to, challenge China's IP violations or try to reduce and balance out the trade deficit, right? Who knows? We'll have to see. But I think more than anything, this has to do with, as I mentioned, not only the ECB, but the overall global central bank balance sheet reduction, the overall increase in interest rates across the board, how we're not seeing relief to the economy. This is not good for asset markets. This is not good for properties. It's not good for equities, whether it's U.S. equities, Chinese equities, no matter what. Liquidity flows on a global basis. If the U.S. cuts quantitative easing, it not only hurts the United States markets, it could hurt European markets, it could hurt Chinese markets, and the vice versa. As the ECB cuts back its quantitative easing, and China stops creating credit out of the wazoo, it stops lifting up global markets. Money moves where it wants to, and I can tell you all, when the situation is not predominantly beneficial for correlated assets tied to economies, ones that are well overextended after a more than 10-year rally, where do you think that money is going to flow to? It's going to flow towards safe assets that you can use to hedge. And I can tell you, when I take a look at gold's chart here, I'm going to turn off my drawings here for the newsletter. I'm seeing lower highs here, right? I mean, this may be good. You might be building a descending wedge here on the previous, resistance line that we had here, which would be good. But to me, guys, I'm looking at the best performing asset of the year. I think a lot of it is finally starting to come in and play into Bitcoin. I think we're finally starting to see people realize that this is a non-correlated asset. And I think it's been a small fraction of people who have realized this. What happens when family funds, when hedge funds, when the broader financial sector realizes that this is probably going to be the next store of value? And it's only $150, $160 billion in valuation right now. I don't know, guys. I'm going to stand by my belief. I can tell you this kind of price action, I mean, you're seeing the volume come through on major exchanges. You can call it manipulation, you can call it whatever. I think people are really starting to FOMO in to the idea that this might be where wealth is going to transfer over the next decade. So anyways, that's it for the video, everyone. Thank you all so much for watching. I hope you all are having a fantastic day wherever you are. A little bit of a rant and a rave as always from time to time. Hope you all are doing great, and I will see you all in the next video. Stay tuned.